Welcome to the Blockchain Startup Show with Harrison Wright, a podcast dedicated to dauntless blockchain leaders building our new decentralized future. You'll hear stories, successes, trials, and tribulations as we channel into the lives of high-performing leaders in crypto and Web3. Whether you're currently a Web3 founder or leader, or you one day aspire to be, you'll gain crucial knowledge and insights to accelerate your learning curve, handle this industry's greatest challenges, and make the impact you've always dreamed of.
Hi, everyone. This is Harrison Wright. Welcome back to the Blockchain Startup Show. I'm really excited to be joined today by Orion Parrott, our special guest. Orion is co-founder of Orange DAO, which is the largest credible community of builders in crypto. Orion is also a tenured advisor, both to funds on one side of the equation and founders on the other. Really excited to have Orion here today for many reasons, not least of which he's just a great guy. But Orion has a wealth of experience and expertise to offer, especially for founders. And yeah, we could talk about fundraising, but also strategy, what makes one team successful over another. And, from my discussions with Orion we've had in the past, he just deeply cares about the success of founders. And I find I always really appreciate talking to people who've worked in the sort of fund, accelerator, incubator sort of space, because they always seem to have the most fun of anyone in crypto. Working with founders and helping them be successful in an early stage seems to be super rewarding. Orion, welcome. I'm guessing you'd agree with that.
Hey, Harrison. Yeah, thank you. I'm thrilled to be here. And yeah, definitely agree. It's been a blast. I know the one investor says that venture capital is the most fun you can have with your clothes on. So I tend to agree. And yeah, just all about supporting founders building the future. So it's amazing opportunities that we have to be at the center of everything that's being created.
My only question is if your friend has tried riding motorcycles before.
Yeah, I don't know. Not sure. I do love riding motorcycles as well.
Yeah, I might have a bone to pick on that, but we can put it number 3 in the list or number 2. That's fine. That's still pretty great, right?
Absolutely.
So tell me, tons of interesting stuff I'm looking forward to diving into with you on macro and early stage strategy. But before we get on to that, could you tell us a little bit about you and your journey?
Yeah, certainly. I started my career in defense electronics after studying electrical engineering. I spent a lot of time in various software languages, also doing simulations for wind turbines. I had also been a real estate investor on the side throughout the years. So from the beginning, I had a pretty broad base of experience, forming me as a generalist. I've also enjoyed studying different languages. I've lived abroad twice in Israel and England, and ultimately did an MBA at Berkeley about 10 years ago, which got me into the startup world. I founded a company called LendSnap in the fintech space. This was software for mortgage lenders. Took that through quite a number of accelerators, ultimately culminating with Y Combinator, which has been an amazing community to be part of since then. I grew an interest in crypto as early as 2013. Fun fact, I had applied to Coinbase back then at the time, but they didn't take me. And so working with the Y Combinator community to really create a sub-community of crypto enthusiasts since 2018. And this grew into building Orange DAO in 2021. And by then we were all angel investing, and we started to say, what if we had a DAO? What if we had a fund? And I had recently wrapped up my latest startup that was in the virtual reality hardware space and was able to fit into that role, managing the fund as its managing partner, doing all the operations. So it's been a wild ride at Orange DAO. We've invested in over 220 portfolio companies in the last 3 years, taking a very early strategy. We can get into that more, but I've recently stepped away from the day-to-day management at Orange Fund and, just going after new opportunities in the space.
Fantastic. If you were starting it today, you could almost be a little catchy with it and call it X Combinator. Yeah. Same with the whole Twitter obsession in the space.
That's right.
But it's funny. It's a cool origin story you're saying about Coinbase, because that seems to be a common thing. Was it? I might be making this up. If this is not the correct story, there's a similar story. Something like Steve Jobs tried to get a job at Microsoft and they turned him down, so he created Apple. I don't think it is that, but it was something very similar to that.
Right. Yeah. There was definitely lots of back and forth between the two companies in the early days.
Yeah. Phenomenal. Any regrets?
I do regret not getting into crypto sooner, but overall with life happening and the excitement around technology, I'm just glad to be here.
Hey, there's a surprising number of people that work in the space that don't own any Bitcoin.
Yeah, true. I've been learning that and hearing
Phenomenal.
that. Yeah. So I'm glad that I was, plugged in a long time ago on that side.
It's a very interesting dynamic with crypto. And as the industry's grown, I see it less. But maybe, speaking of 2021, last cycle, probably a quarter of the people that I would target to recruit, they didn't need the money anymore. They're already financially independent. I've never worked in another industry where that was the case. The percentage of financially independent people in most industries is basically zero.
Yeah.
And I've definitely noticed this. There's a certain archetype of person who they're just in it for the love of the game and they'll be here forever. But you see people make an abnormal amount of money very quickly compared to anywhere else. And you can see the sort of secondary impacts in motivation and drive. Some people and projects just kind of fall off. And I think it's because, well, I've made so much money now. Can I be bothered to do this anymore? So it's a strange dynamic that I've not seen in any other space.
Yeah, that can definitely happen. And yeah, some folks check out, but I think there's a lot of folks, I think not another possibility is when that happens very young and people see the possibilities and they've still got a lot of energy left to run, then they're really in it for the glory and for, hey, what can we create, to just continue doubling down on the world that they love, the future world that we're building.
One of my favorite calls I had, this is maybe 2 years ago now, I think. Someone who joined an early stage team as one of the very first employees, in his early 20s as well, very young for working in crypto. Rode with the team 4 years, exited. He had $50 million in tokens. He booked a call with me because he wanted to discuss his next career move. The first thing you do, you walk out with $50 million. Like, hey, what's my next job? That was pretty cool.
Yeah, very much. That's awesome.
Not everybody would do that.
Yeah, that's right.
So tell me, as we're recording this, I don't know exactly when this is going to be released or when you'll be listening to this, but as we're recording this, it's January 2025, fourth year of the cycle. Very interesting things going on with the macro. Speaking of people making abnormal amounts of money, probably a few people around have just made enough, more money in one day on the Trump coin than they would have made in a lifetime working. The rest of us are still here, working away. What do you think the macro has in store for us? Yeah,
I think it's going to be, the headline is very exciting, very positive, but also a lot of variance in that, a lot of unknowns. I'm highly confident that it's net positive, but there's going to be some big bumps along the way. More specifically, referring to the meme coin that was launched by Trump. I'll say I didn't vote for him, but I'm excited about what his presidency is going to lead to for the crypto industry in particular. I did get in on that coin. I was fortunate to hear about it within 6 hours of its launch from my community. So I didn't make crazy money, but it's, a nice boost for the month. But some of the things around the way it was launched, I think, is informative. And so this token did a lot of the things that the industry does not want to be known for, namely having an 80% insider allocation. Really makes it look like a money grab. And there's debate about who owns that, right? The easy answer is the Trump family, but it can also be, proxy through a royalty or licensing deal where someone is able to use their name. Either way, there's going to be some value accruing back to them. And this token is doing what tokens usually do when they don't have, an underpinning community or value to be gained. They're going down, right? And so some folks made money. ideally in investing, there's a value creation component so that it's not simply zero sum with money transferring hands. So when you think about it and go a little deeper, it's a little harder to get excited. I do think there are also meme coins that drive real value. And I don't think it's over for the, I think there's going to continue to be, I say coins because I'm referring also to the Millennia coin, and maybe there's others as well. But it's going to be interesting to see how that gets leveraged throughout the next year and the next 4 years. And so maybe there, I'm hopeful for there to be some upside and true community benefit derived from it.
Yeah, it's such an odd situation because the industry feels so different than it did in 2021. But there's a dichotomy to it, right? Because on the one hand, the level of hyper gambling, degen stuff in the space right now is on a level I've never seen before. I'm not sure if that's a good or a bad thing. And you could argue that Solana's primary use case is really gambling. But at the same time, if you look behind the scenes, the state of crypto products is so much better than it was in 2021. I mean, DeFi in 2021 was interesting for degens, and I think that was about it. I was professionally interested in it. I didn't use DeFi. I was a buy and hold guy. Now, DeFi is at the point pretty much where you can get rid of TradFi altogether. It's a much better investment vehicle. You can take out self-custodial loans into Bitcoin that get repaid by appreciation with lava. You can use DeFi insurance to protect your stablecoin yields from losing everything to hacks or depegs. It's just getting to a state where it's a real suite of products that real people can use. And yet, all the attention's on the hyper gambling, which has gone to new stratospheric levels, and no one seems to care that much about putting their traditional investments on stablecoin rails. So it's a very interesting time.
Yeah, I think that's very true. And even definitely over the last, I'd say 2 quarters, where there's really been an explosion in meme coin interest. And maybe that's just for a lack of attention grabbing technology really getting built. But there is, meme coins have stolen the show, basically. And the overall return from investing / gambling in them in 2024 far exceeded what we call tech alts, right? Companies trying to build real software, solving real problems that happens to have a token. And so I think there will be ebbs and flows of this. I love seeing the industry maturing. There's so many tools that it's hard to keep up with. And of course, once something happens on Ethereum or Solana, then there's a rush to build the similar technology on Base and many other chains. So yeah, there's kind of an arc of crypto venture that this speaks directly to, right? As investors, some of my peers, and I find myself asking sometimes like, well, do I switch over to the meme coin side? Can I let myself invest in something that does not seem to have fundamental value? Now, communities do have fundamental value, right, is the thing. And so the lines are blurred. And I think this is all, our job is to make sense of it. I think my framework for thinking about it comes from a class I took at Berkeley in 2014 called Exponential Innovation with Professor Sarah Beckman. The nature of innovation changes because the pace is changing. And I think we see that now, as you said, like with meme coins, it's at a fever pitch. It feels wild, and it is. Unprecedented things will keep happening, I think, is the message. And each cycle is not going to be like the last cycle. A good friend of mine who I know and respect says that history doesn't repeat itself, but it rhymes, right? And so again, as investors, our job is to figure out, well, how is this cycle different from 2021? And you'll have a hard time if you think that it's going to be a repeat of 2021, right? So different forces come into play. But again, it's really just the nature of innovation that things are happening so quickly. And maybe some of that is that individual startups building something real, it's hard for people to grab attention, right? And so we're in an economy where it's an attention economy, and what grabs attention, right? It's these high-flying bets on coins named after dogs. Yes, that's problematic, but it's just the reality that I think innovators are dealing with.
You talking about this brings to mind something else that I kind of thought, it's only really consciously occurred to me now, that if you look at the original vision of Bitcoin, you could argue that Bitcoin is against financialization. So you've got this entire system of the world that's built on fiat currency, inflation, engineered financial products built on top of financial products, causing the financial crisis in 2009 and all that stuff. Bitcoin is, okay, we're going to return to sound money. Here's our digital cryptographic way of doing this, so you can't interfere with it. But everything that's being built since Bitcoin is actually hyper-financialization on steroids.
Yeah.
Like, it's the opposite of Bitcoin. But people seem to appreciate that and want to play with it and make tons of money.
Yeah, that's interesting. I think there's a strong interest in creating the same kind of mechanisms, wherever value can be created, extracted, people are going to find opportunities to do that. And so, yeah, you're absolutely right. Now it's elaborated to smart contract insurance, ways to hedge on depegging that you reminded me of today, and leverage and lending and borrowing. And it is possible to end up with systemic risk on top of this system again, depending on what the incentives are.
And I think what spurred me to think about this was when you mentioned about meme coins. Well, you could say they're having no utility, but actually the community is a utility. So to me, putting a token to a community or a sentiment or a person, it is very much a form of hyper-financialization, right? It's attaching a market to something that ordinarily would not have a market attached to it that can then drive speculation.
Yeah, that's right. And yeah, I think fundamentally the goal is that this can create value that the community can capture. And then participants are rewarded, right? Unlike major Web 2 and Web 1 platforms. And so how can we allow communities to capture more value? And then, of course, founding teams still get to do that as well. So I think that is a primary ethos. I think a lot of it's been really challenging for people to actually make that happen, let's say. But there have been a couple teams that seem to be pulling it off lately. I know Hyperliquid has been praised for the way they launched and driven by how they honor their community.
It makes you wonder if there were more projects launched like Hyperliquid, people still be so fascinated with meme coin.
Yeah, I think so. I think there are many great projects out there. So yeah, it's interesting to think of how can tech alts, value creating startups in the traditional sense, get the attention that they deserve.
It brings to mind something, because I guess Murad would talk about this, but there's this theory of meme coins is, hey, the outsiders rebellion against the insiders getting the first dibs investment on things. It brings to mind something I still can't get my head around all these years later, is the concept of the accredited investor in the US. So there's a law. If you're not familiar with this, if you're listening to this and you don't know what being an accredited investor means, is that you're not allowed to invest in private rounds or certain investments unless you have a certain net worth that you can prove. And it's just such a bizarre concept to me. So sorry, you're not allowed to get richer because you're not rich yet. Only the rich can get richer. It makes absolutely no sense to me. I think you sort of juxtapose that philosophy against, hey, anyone can gamble on meme coins. It's it's an equal opportunity casino.
Yeah, and I think it's a really interesting trajectory, and I think part of that trajectory includes, not just the U.S. accredited investor rule that you mentioned. Those were defined back in 1933. We're coming up on 100 years ago. And since then, crowdfunding, both equity crowdfunding and other types of crowdfunding. And, I would say overall, the arc of crowdfunding is that it's not been a huge success. It did not unlock $1 trillion of capital, but limited billions over years. So traditional finance, money managers is still where the most liquidity is. And so the regulations in the US, regulation crowdfunding created the possibility, but then it just came with a whole lot of new friction, right? A different set of rules to follow that are actually quite encumbering on smaller companies. Now you've got meme coins that, intentional or not, tries to sidestep the whole thing. And arguably, they're quite a bit worse, right, for the uninformed retail investor in terms of overall outcomes.
Crowdfunding is a really interesting topic. I'm gonna go. I have a habit of doing this. I'll go out of left field somewhere, or seemingly left field. But on a philosophical level, I think crowdfunding and its success level versus, say, traditional VC investing is an example of how decentralizing things doesn't always work like you expect. I'll give you another example. So in hiring now, it's quite popular for you to have these bounty platforms, like things like HireChain or Paraform. And what they essentially entail is, as an employer, you can go on the platform, you can post a bounty. Okay, if you submit the right candidate for this job, we will pay you X amount of money. And depending on the platform, X amount of money, it's usually somewhere between $5,000 and $40,000. So it's a little less than you pay a recruitment company, but then on the other side of the platform, anyone can be a recruiter. You can just be a guy that knows some people and submit some recommendations through the platform and get a bounty fee, or you can just work through that platform. And there are recruiters that do that, right? They don't want to business development, or they don't know how to do business development, so you just work things off the platform. So theoretically, this would produce a great result. And they do okay in certain circumstances, I think. There are times and places where these bounty platforms make sense, but they have not, and I think ever will, replace working with a headhunter or having an in-house headhunter or whatever you're going to do to approach that problem with ownership, because there's no ownership of the problem. I think with crowdfunding, so if you're a VC, you're going to do all the due diligence to make sure you're going to, on average, make a return on your investment. If you're a headhunter and you're engaged on a project, you're going to make sure you deliver that project. When you diffuse the responsibility against thousands of people, there are times and places that works well, but it's not a good solution for every scenario. I think you can see it also in, if you notice that there are much fewer DAOs now than there were a few years ago. It's not that DAOs can't work. You co-founded a DAO, but they are fraught with problems and incentive traps that people, I think, didn't appreciate when they began the DAO journey.
Yeah, I think that's a super interesting conversation that's relevant for anybody launching a community with or without a token, is how to think about those incentives. And I think what people sometimes forget is just the human relationship component and how these decisions are made. And so, to what extent is your new product or business requiring people to do something that they've never done, or doing it in a way that they haven't done it? Even if the target customer fits the profile of an early adopter, it can still be hard to, make those changes. And some things are the way they are for a reason, right? So the strength of recruiters is that human connection and, building your network. It's just really hard to replace that with other mechanisms, because there's a vetting process that goes on, as you said, right? That's really this face-to-face human understanding and relationship.
Yeah, but you could even see it with, people have been predicting for years now that we'd see the end of realtors, because, hey, why do you need a realtor when you can just do everything on chain on the platform? And I think the argument for replacing realtors with a platform is much more straightforward than the argument for replacing recruiters. It's a much simpler process and there's less nuance involved in it. But even then, it just hasn't happened. Like we're talking to realtors right now. We're in the process of moving. Could I use a platform? Yeah, but I'd rather just have someone who knows what I want and helps out. I'd be surprised if that goes away.
Yeah, that's right. And I think some of those human roles that are really at the interface have a place, right? That's what we're saying. And you can improve these roles through the backing of technology. But in the end, I think it speaks well for service provider type companies that provide a human service that can be enabled by technology. Now, whether that's a scalable startup venture is a different thing. Maybe that means consulting and professional services survive better. I guess as an investor, you've got me thinking already which startups are going to be able to grow a scalable business out of that by being the interface for the human component. We even talk about DAOs this way in the early days of Orange. We're talking about technology being an enabler and DAO voting and DAO tools as enablers. And what's left at the end of the day, right? Are humans even involved? And there could be this pure human connection with no technology in the way, based on relationships enabled by a lot of technology behind the scenes, but not removing
Yeah,
that
I think
human
that's
to
right.
human connection.
I'll give you a case in point. When with the whole AI thing, everyone in sales started getting obsessed with, oh, I can just have an AI send cold emails for me and I can automate my sales process. No, that's never going to work because it's a competitive landscape. The thing that people miss with this kind of technology is if it's a non-competitive landscape, any of that kind of technology is great. Perfect. I can automate my processes. Now I can do something. And there are certain things that I can now do using LLMs in 2 minutes that used to take me 3 hours. That's great. It's a sort of internal process. Saves me a ton of time. And anything that exists in a competitive landscape, when you make something simpler in one area, you just create more competition in another. So you're not actually solving a problem. You know, if you had access to an AI cold email bot that can prospect for you on autopilot 24 hours a day in 2015 and no one else has it, amazing. Infinite money glitch. But everyone has that now. So everyone's inbox is getting flooded by these AI cold emails. So no one responds to cold emails anymore. Like I've literally pretty much given up on the channel because it's almost a waste of time. So what I find interesting, maybe this is a lesson for contrarian thinking and founders and what to build. The moment everyone realized, oh, I can have AI sales, they're really excited about that. I'm thinking the opposite. I'm thinking this is going to mean that the value of personalization and one-to-one connection and vetted communities and face-to-face meetings and real interactions that you can't scale is going to become much, much more valuable than it was. And what do you know? I was one of the early adopters of automated cold email back in, say, 2015 when these first tools first started coming out. Back then, you could literally just load up hundreds of people in a campaign. The same people already press play. People will come back to you after this fourth or fifth email. I'm so sorry I didn't come back to your earlier emails. I was really busy. Thank you for your persistence. Of course, they think it's persistent, but it's actually automated. Now that doesn't work because everyone knows they're automated and everyone's sending them. Back then it worked. Now, I pretty much don't automate anything outreach-wise because the opposite is so much more effective. One-to-one, and I actually get responses. Like, I'm kind of veering off topic here, but speaking of emails, maybe I shouldn't give this away, but something I found really effective, if you do have a need to send cold emails and on another channel, I found something to be really effective is sending it to 2 people of the same company and putting hi both. And my theory for why that's effective is because people know that can't be automated. It had to be you sending it because there's no tool that will do that. And you see,
Right. Even if they don't know that
they
know it,
now.
they know it.
Yeah, exactly. It's a subconscious. Oh, maybe I should pay this attention.
That's smart.
And you see
That's smart. Well, there's a nugget for the audience. That's awesome. I'm curious, a question you're making me wonder, with attempting to automate emails, can you just write them so that they're so personal enough that it's really you talking and personalized? Like, how can you tell the difference from, an individual email that you wrote by hand? It sounds like you're saying that it can't be personal enough, or it's going to always feel automated.
I think the problem is the saturation of this stuff has destroyed the channel itself for the most part, which I think should be a warning to anyone who wants to chase after shiny objects like this.
Yeah.
But so I know that I'm not an expert. There's a level of engineering skill in this that I do not possess and do not need. But people who have large markets, say crypto is a small industry, but say you're selling a software product that has 100,000 potential customers, then you can do things at massive scale. For me, I might have 500 potential customers at any one time, so this would not work. Yeah. The average cold email positive reply rate now is something like 0.2%. You need thousands and thousands of people to reach out to make it work. But I know there are ways that people have mastered to use multiple passes of LLM stuff to make hyper-personalized cold emails that look like a real person has written them. But I think that's part of the problem is now people get, if you have a high-end job title at a big company, you're going to get bombarded by these. So I find more success reaching out via different channels. If we're recruiting, for example, I would prefer to approach someone on Telegram.
Right.
There's a really
not email. I see.
On the phone.
Not email at all.
Yeah.
Okay. That makes sense.
You can't automate a phone call and no one wants to make them anymore. So I find much success there if you get someone's number. But I'd be curious if we actually, before I go on to that, just thinking about this, there's a lot of talk on Twitter at the moment about, founder-led marketing in crypto, which is another thing that you now have to do as a founder, be on Twitter all the time that founders didn't used to have to be responsible for. But I think that's another reaction to everything being automated and, the obsession with events in crypto as well, which I've never seen in another industry. Everyone wants to do in-person events all the time. It's to the point people are starting to complain about there being too many conferences. But I think that's also a function of being a remote industry and people craving actual connection.
Yeah, that's interesting. I guess I know what you mean. And I was wondering, is it just the evolution of work being, more global and more remote, but it's probably particularly acute in this industry, right? Where decentralization and globalization is absolutely a virtue, whereas in some it's not. But yeah, so I haven't looked outside of crypto venture and crypto entrepreneurship to see, how are these other industries doing on the conferences? Because yeah, absolutely. I mean, even going to ETH Denver, one of the main conferences, I know of 2 other significant conferences happening at the same time, which really tells me that the calendar is pretty full if people need to schedule their events during ETH Denver, but in another part of the world.
Other industries I've been in have just been nothing like it. I mean, my first industry was industrial automation, and there was industrial in the UK anyway. I can't say for worldwide because another thing was changed. Recruiting was very local. So there was one conference that would happen once every 2 years, and it was 2 days. And that was it. People show up for that for 2 days. If you wanted to get anything done, you better do it on the first day, because on the second day, everyone would be hungover. So forget doing anything useful.
Yeah.
And that was it. That was conference. I know people that spend hundreds of days on the road a year in crypto.
Yeah. Yep. Yeah, I certainly could. I mean, I get invited to events in Bali, everywhere. So, sideshow to the World Economic Forum that's happening this month. And
You could argue half the crypto industry is actually just creating a market for meaning and connection, because it's happened so quickly that I think those of us on or approaching the wrong side of 40 maybe don't appreciate it, because we grew up in a different world, and suddenly we're in this one. If you're under 30 now, you haven't known anything different. But it used to be the case that you would live in a certain place, your life was tied to that place, you might travel or you might know people in other places. Fundamentally, you would be in one place, you would be surrounded by friends and family.
Yeah.
Your work was something you did to make money, but then you would come home and you would do something else. And even that separation between work and home, when I started recruiting, which is not that long ago, in 2009, we would come into the office. We didn't have smartphones. They weren't a thing yet. That recently, I got my first smartphone, I think 2012, 2013. It's not that long ago. Once you left the office, we would turn the phones. We had physical phones. If anyone called the office after that, they would leave a voicemail, but we wouldn't get until the next day. If anyone sent an email after 5 p.m., we wouldn't see it. So there was that, that work was a place that you went to, you did your thing, and then you went and had the rest of your life. Now, it's all intertwined. I mean, I'm pretty sure most people who work in crypto are looking at Twitter at least 5 hours a day, round the clock.
Yeah.
You're replying to messages. Telegram's coming in at midnight. Oh, let me just get back to that. And I know this is true for me. I think it's probably true for most people now who work in the space. There's the vast majority of my friends and network are nowhere near me physically. They exist online, or we see them occasionally. They're not in physical space where you live.
Right. Yeah. There's an interesting, dichotomy between, like, I'm based in San Francisco, and there's a real cost to doing that. I do love it. And we say San Francisco is the new San Francisco, that it's not going away, and it has so much gravity with tech, but sometimes the distinction, feels rather symbolic, right? Because I am talking to people around the world, and even, my day sometimes could be 50% talking to Singapore, Japan, and Hong Kong. So yeah, it's interesting. And I think, as you said, it's just, as technology allows more things to be possible, the expectations shift. And so, the distinction of home life, like today, I don't need to leave the house, but when I do, sometimes it's like I'd rather not. But I think, that's why we probably see so many more crypto events is most people are able to work from home remotely and then need to get out and see people. And you do need that FaceTime. So
Yeah, and I think this, as geography has stopped being a barrier, it's created different types of groups. So when everything was geographically based, I mean, even in businesses, for example, before, it would have been unheard of 20 years ago for someone sitting in Europe to do recruitment in the US. Now people do it all the time. I live in Mexico. I have zero business interest in Mexico. I doubt that I ever will. Doesn't matter. It's really no different to being in the US. I can take a 2-hour direct flight to Austin. It actually doesn't matter. It's the same time
Excellent.
zone,
I love that.
But yeah. And when things were more geographically bound, they also were more generic. So, I keep using recruitment as an example, just as what I know, right? But back in the early days of the recruitment industry, recruitment companies didn't specialize in things. They were just recruitment companies. They would recruit any job. And then gradually they would get a little more specialized over time as the industry matured. So then you might have someone that specializes in the legal industry in the UK or something like that. And now they've got more and more hyper specialists as geographies have grown. So now, the specialism might not be geographical, but it is instead focused on a specific niche. Like, this is a whole nother story, but if I didn't already run a crypto recruiting firm, a niche I would be quite interested in is running a recruitment company for compiler engineers, which is an extremely difficult job function to recruit for. There's only a few thousand of these people in the world, and there would absolutely be a space for a compiler recruitment company, that just recruits compiler engineers all around the world. You also see the same thing with people's social groups. So, if your social connection was your town, back in the day, you would all sorts of wildly different people that you grew up with and know of all different ages and interests and so on, and you would get on with them. Now, now we have the internet. People's social groups are, other people who are also 5'7" and like these 3 interests and are interested in this thing and have these beliefs. These the hyper niche groups that wouldn't happen before. And it seems like all this sort of, I don't know really where I'm going with this, but I think there's a message in here for something around founders and building communities and meaning and how that's something.
Well, I've got one for you. One of my brothers was in a Facebook group dedicated to people with his exact name. So it's like as if you joined the Harrison Wright Facebook group and everyone was named Harrison Wright.
It's funny. I don't really use Facebook anymore, but I've literally had an outstanding friend request for something like 13 years now. Another Harrison Wright wanted to add me, and yeah, whatever. But I remember looking on his profile one time and he'd added, and I had no idea there were so many Harrison Wrights in the world. I thought, my name was unique, but yeah, he added all the Harrison Wrights he could find. It was kind of hilarious.
That's great.
What if we kind of we started talking about the macro and kind of inadvertently got onto positioning and community and these sorts of topics, but we're going to talk about strategy, at least a strategy for founders. This feels like a potentially good tie-in.
Yeah, definitely. One of my favorite topics. Yeah, this is something I've been working with several founders on currently. So after founding Orange DAO, as I mentioned, I've recently stepped away from the management of the Orange Fund and have some availability for connecting with founders to work with them on their fundraising and their company strategy. And so I think the way I think about strategy for startups is you really want to just to make sure that you're working on the right problems and that you've defined the problem properly. And it's really a back to basics methodology that I find a lot of companies need. I could rattle off many aphorisms such as make sure you're talking to customers, but you absolutely must. Found my role spending time with founders, helping them look at the largest picture of what their business can accomplish and what problems they're really solving. And I think something that can happen is based on the founder's prior experience, it's easy to come in and say, well, I worked in a certain industry, and they come with their perspective and they define the problems, particularly of Web3 or crypto, with respect to their industry, but to see the broadest perspective. And this is where investors can add some value too, of helping you get to see that and challenge the assumptions of who's the customer that you're solving this problem for and who's banging down your door to solve the problem that you're dealing with.
You must, I don't even know how many hundreds of startups or potential startups you must have interacted with, but in your experience, how common is it that founders even think about the problem first? Is this common practice now, where what difference do we want to make in the world? What problem are we solving? How common is it that they're trying to come in and say, hey, I believe in this thing that I want to push on everybody. Listen to my ideas.
Yeah, there is an old meme about this at this point that I just learned about crypto and I'm here to fix it. Right. And so honestly, I struggle this with myself in terms of innovation, sometimes feeling the need to have the entire picture of all the possibility of solutions and what is getting created out there. And you really want to be able to time box that process to see who's working on what. But you do see it with people who come into the space, and maybe they want to offer the Web3 version of a Web2 product. That can be a great idea, but these things come in cycles, and there could be other companies that aren't around anymore that already worked on that. And so for investors, the idea might be played out, right? And we say, oh, that's from the last cycle. And so you see this sometimes where there's a real excess of, say, neobank. I've not been seeing this lately, but a lot of startups offering, a couple of years ago, there were too many offering undifferentiated financial services, such as a savings account and a debit card, and some moderately high yield, single digit percent based off of crypto. And it's hard for them to cut through the noise and have a differentiated set of features. So those are getting consolidated and reorganized now.
And you could also point to there's been so many memes and jokes go around it, how it seemed like for a while that every day there's a new layer 2 launching.
Yeah.
Well, yours does 10,000 TPS, ours does 10,001, and it's 3.6% cheaper.
Yeah. Yep.
Do you know, I appreciate you might not know off the top of your head, but what's any guesses on what percentage of crypto projects that get funded actually succeed, as in, get real sustainable success?
That's a great question. I mean, generally for startups in general, I think we say either 90% or 95%. I think those statistics are hard to make sense of unless you know exactly like what stage we're talking about, right? And so as you progress forward in stages, the numbers get a little better. It's actually a very interesting question of whether, would crypto be worse or better than the average? And I guess that's going to depend on the macro situation of where the hype cycle is. I think there's even more hype probably with AI right now. Although crypto is gaining, given the current US political events. And so there is a lot of hype. As investors, I like investing in a bear market because things get quieter and the people who are still building are the real believers, and you don't have to sort through as much noise of who really knows the field. So yeah, I guess I would expect that because there is significant hype in both crypto and AI, that the numbers are probably a bit lower overall in terms of the final success rate, for the earliest stages where there are a lot of ideas flowing in, certainly.
Mm-hmm. That makes sense. What have you, again, this might be a gut feeling thing rather than any hard data, but I would say, broadly speaking, you have businesses of innovation and businesses of improvement. Business of innovation, i.e. this thing has not existed before, we're building it. And then business of improvement, so it's like X, but better. What have you seen the trends in crypto as to which type of business is more likely to be successful?
Yeah, I think as investors, well, I tend to prefer the innovative businesses that are doing something new, right? And we can describe that as going from 0 to 1 instead of going from 1 to 2, where it's an innovation. But I think there is a lot of room for, the types of businesses that, say Web2 businesses getting moved on to Web3. And these are really founder bets, right? So it's going to depend a lot on the execution of the team and their connection. So for any founder, it's extremely helpful if you can find your find your advantage in going to market, because if your go-to-market plan is a list of the possible ways to go to market, it is really showing that you don't have an advantage, but you really need one. And that can be your network or your connections, your insights on the industry of, where to put ads, who to talk to, and how to pitch the product to customers in the right way that fits their needs. So any type of business, I want to say any type of business can be successful. I don't mean that any idea is going to succeed, but it really depends on, most on the advantages and having the right team that can execute on that to get the product in front of customers. And so one of the things that I love hearing as an investor is, I've done this before, right? When the founder says that, and if they can prove it, then that's a really strong play that they do have an advantage because they know what they're doing.
It's funny because we look for the same thing when we're hiring. And I'm going a little bit philosophical here again, but something that I keep coming back to, this manifests in many contexts, is a lot of the ways that people think about doing things, they don't consciously know where this sort of mental model of the world came from, but it came from a prior era where it was applicable, but it no longer is. So, I talk about that in hiring a lot, and I won't get too much into that now, but for example, people, when they're hiring, what do they say they struggle with? They always say we struggle to find candidates. But if you actually think about it, it doesn't make any sense, because everyone can find candidates. They're online. You can look at LinkedIn, you can look at Twitter. You can hire a minimum wage person in India to go and make you a great list of candidates. That's not a skilled job anymore. The reason people talk about finding candidates is 20 years ago, before we had all these internet technologies, that was the bottleneck. How do you find people? There is no database of that information. We used to physically call into companies, who's your sales guy for the East Coast? And then we'd build maps. It was a very time-consuming, difficult process. Then, if we did actually headhunt someone, we call them, hey, I'm a headhunter. You'd get this reaction, wow, I've never been headhunted before. I'm flattered. Can you imagine that now? People get 20 LinkedIn messages. Hey, whatever. So the mental model of finding candidates is a holdover from decades ago that no longer holds true. And it influences how people approach the entire hiring process for ill, because they don't even realize they have this poor mental model. So where I'm going with this is, you think about that in terms of business and product market fit. I think product market fit is far more important than it used to be, because in the pre-internet age, you could brute force a business to success in a way that you can't do now. For example, the most important skill in any B2B business until not that long ago was cold calling. You could have a room full of skilled cold callers. You could sell anything pretty much. But what mattered was the quality and quantity of sales activity that you did over and above any other factor. Because you could have the best product in the world in the pre-internet age, no one's going to know about it unless you've got an army of people phoning people about it. In B2B. Yeah. In B2C, you think about restaurants. Before we had Google reviews, you could be a terrible restaurant and survive. Just put it in a tourist area, people will still come. It doesn't matter how good it is. I'm thinking of a specific experience. I used to live in Malta, in the Mediterranean, obscure little country. And we was just late one time. We're trying to find someone to go for food. We're about to stop in this place. I looked all right. Checked it up on Google Maps. Like 1 star, absolutely terrible. Oh, no, we're not going there. And then I looked more into it because it was fascinating, because the stories were horrendous, right? But they'd been around for decades. And I think they used to be successful because nobody had Google reviews. So they would go and eat a terrible meal, but there were enough people coming in to make it viable. And I think, now, if you have a bad product, everyone finds out about it. You need these viral growth loops built on fundamental problem solving, because all the competition is exposed and public now, and all the value is accruing to the best teams versus being more distributed by who's doing the sales and marketing activity.
For founders building software, you're really going to need to optimize for that stickiness, and it can be just hard to get attention. I say hard, but it's really it depends on your positioning. And once you get them in, how does the product meet their need? It's really hard to tell from a screenshot. Letting people try the product is the best way to see. everything should be an experiment, and how can you adjust, and how can you make them happier and find what your customers really need.
Speaking of what customers really need, what do you think we can learn from the whole Solana Ethereum debacle?
Yeah, I think I'm a long time, ETH maxi, as it were. I'd say not to the exclusion of other chains, but as being a diehard believer. And I think I see for a lot of folks that's crumbling a little bit right now. I think we've often said in the past, like with Ethereum, it's about the culture, and that it's this strong technical focus, and the ethos around Vitalik. But I think it's wearing out. And so I think the reason that some of this is wearing out, what do these customers really need? At the end of the day, there's a simplicity to it, which is people want to see the price appreciate, so that their trust and faith by holding the token is going to be rewarded. And people are not seeing that. And so it's rather banal, rather simple. But I think that's a big part of the issue, right? And the culture would feel better if it kept moving. So there's this interesting tie-in where, the culture only takes you so far. And I think over the last, well, I don't have the data. If you pull up the chart, you have the data right in front of you. But it seems like over the last 2 years, the relative gains of ETH has not kept up with Bitcoin, basically. Right. And whereas Solana somehow has continued to boost, and I think it's through, a lot of utility and a lot of community, and really stylizing themselves as one of the key meme coin chains. I think Base has done really well in that respect too. And then the Trump coin that basically broke Solana last week is really kind of a culmination for that. Right. And so, if you missed it, the ETH or Solana price shot up from 200 about all the way to 280, right? And so this was, whatever gain that is, 30 or 40%, and it's back down a bit, but it just makes it an exciting place to be. And I think Ethereum is losing some of that, and that maybe it's been too technically focused. And I see people saying, well, that they're not focused on the right things. They're not aggressively growing enough. And so that's been interesting. And I think we've seen even some limitations in Vitalik's posts of their, the ability to deal with this in a vibes positive way.
Yeah, it's an interesting thing, right? Because I'll openly say, I'm pretty sure I mentioned this on other episodes. I did not remotely predict the Solana comeback at all. That took me completely by surprise. I thought it was dead a couple of years back, whenever it was. I really did. Ethereum, philosophically and as a product, I think I personally much prefer Ethereum. But if you, load up Radium, load up a Phantom wallet, actually use Solana apps, they're so good.
Yeah.
They're so much easier to use than Ethereum apps. And the whole layer 2 thing, from a UX perspective, so I could bridge this to there. And even, maybe this is just me being ignorant, and I should be more knowledgeable about actually using crypto products, but how do I ever figure out what gas fee I need to send? Well, transaction's not working. Okay, let's try increasing the gas fee a bit more. Let's try again. It's just very unintuitive to use. Mm-hmm. And I think the lesson I take from this, which is much easier in retrospect than to predict it, but Solana kind of knows what it is, what it's for, who it's for, and what it does, and it does that thing very well. I don't think Solana is the answer to crypto as a whole, but for the one thing it's designed for, it's exceptionally good at. And then you've got Ethereum, where it almost feels like the sort of people behind Ethereum are trying to dictate what people should want. They're not listening anymore. They're sort of in their ivory tower. We know better than you. We think you should want this, whereas that's not how markets work. It's more like an aristocracy than a merchant approach.
Yeah, and I think that held back Ethereum and Bitcoin from the early days. I say that. I mean, ideology and religiosity around decentralized values. And I think that's just coming into play for Ethereum right now.
Maybe behind all the frustrations and drama and so on, maybe crypto is starting to grow up and how to run real businesses.
Yeah, I mean, I will say I've enjoyed trading on Solana for a while, and in particular recently. And I've been trying out more tools beyond just trading, but also, contributing to liquidity pools and staking, and a lot of stuff just feels easier and faster, and it's nice. So I remember
Yep.
getting really involved on Ethereum 3 or 4 years ago. Sometimes, transaction fees were $60 to $90, and just to do anything.
I remember that was in the great rush of 2021. Suddenly, everyone was looking for alternatives to Ethereum because they couldn't afford to run their projects anymore. And you had all these opportunistic L1s. Yeah, we'll give you a grant, come and build. They're just trying to get anyone to come and build on their chain. And in the end, everything just circled back to Ethereum. Okay, Ethereum solidified, but that's looking a lot rockier now. All right, we kind of covered a lot of ground here, philosophically, a little bit tactically as well. I've really enjoyed it. Any last words of wisdom you'd have for founders or aspiring founders who are listening?
Yeah, I think, I guess what I'm thinking about right now from our conversation is for founders to really give yourself the time to step back and think about your business and do everything as an experiment, usually by talking to customers. And really make time for that, because otherwise time can slip by. And so, time boxing works on an hour or day scale. But for any project, like, hey, we think consumers are going to love this feature or product we're launching, you want to time box that too, to be able to set expectations and learn from it.
There was a quote that I had one time, and I can't remember the source, but it was something like, markets are extremely selfish. So if you insist on being selfish too, you have no chance. The market wants what it wants. Better deliver.
Yeah.
Orion, it's been a real pleasure having you here. Thank you so much. For everyone listening, thanks for tuning in to the Blockchain Startup Show. We'll be back again soon. Orion, one last thing before we go. How can someone get in touch with you if they'd like to?
Yeah, you can reach me on Telegram at OParrott. That's Parrot with 2 R's and 2 T's. OPARROTT.
Fantastic. Well, thank you so much. It's been a real pleasure to have you.
All right. Thanks a lot. It's been a pleasure.